All right, quick heads up here. This is not investment advice. This is just information to get you thinking. Do your own homework, talk to your own advisors, and make sure this kind of deal makes sense for you. We're here to share ideas, not tell you what to do. Cool? Okay, cool. Ever feel like you're playing the wealth building game with the wrong rule book? One market crash and boom, you realize the system wasn't built in your favor. In today's episode of Invest in Square Feet, I'm sitting down with Russ Morgan, a financial strategist who walked away from the traditional advisor world after discovering a wealth building strategy used by the ultra rich. We're diving deep into infinite banking, how to use life insurance as your own personal bank, bypassing traditional lenders, and take full control of your financial future. Russ shares how he went from trusting the stock market to building a system that lets him finance his own investments just like the Rockefellers and major banks do. If you're looking for a smarter way to grow your money without Wall Street's roller coaster ride, this one's going to be for you. Let's get into it.
So I was a certified financial planner. I was a traditional investment advisor, and this started in 2004. So for the first couple of years, the markets are going like gangbusters. I've gotten my certification. I'm starting to slowly build up this client base in the dental and medical field. My wife was a dentist. My brother-in-law was an orthopedic surgeon. My other brother-in-law was a veterinarian. And I'm starting to have some success. And then 2008 comes and the whole thing crashes, right? The market crashes and everything that I thought I knew and was an expert in. I realized that I had very little understanding and less control over what made it go up or down. And that January 2009, I went to an event in Orlando, Florida, and I'd gone to this event every January for the previous, 4 years. And I'd met this man named Nelson Nash. He would get on the stage for 15 to 30 minutes and talk about this concept of becoming your own banker, which was the book that he wrote. And up to that point, I'd always had all the ideas I needed. I didn't need a new one. When things are working, you don't need a new idea. But this January, the things I'd been using weren't working. And he started talking about how you use dividend paying whole life insurance to build a cash reserve and how you can use that cash to do whatever you want to, whether it's buy assets or pay off debts. And I went to a breakout session afterwards and I was fascinated by the simplicity of how you could use this in your life. And I bought this book and I hopped on a plane later on that day and flew back from Orlando to Birmingham. That's where I'm from. And I finished the book and I turned it over, and on the back of it, he had his address, his home address on the back of the book. Nobody else does this, by the way. And I don't encourage people to do it, but he did it. And it was Rocky Ridge Road, Birmingham, Alabama. And I thought, that is fascinating. That is God's providence right there. This man that I had met at the right time lives in the same city I live in. And he had his phone number on there. And I was like, this must be an office number. So I called it on Monday and it was a cell phone and he answered it. And
Interesting.
that was the start of a 10-year friendship where he mentored me and I learned a lot of things. I had to unlearn a lot more things that I thought were true that weren't true. And until he passed, he was 88, 89 years old when he passed, I got to spend time with him, understanding how this concept worked and applying it personally in my life and then teaching thousands of others.
Can you talk a little bit about the impact that Nelson Nash made on this industry? I want to say that he's synonymous with this entire process. And I don't know if the listeners have heard of Nelson Nash before, but if you look into him a little bit, he's all over this. So I'm just curious to get a little bit of your insight, knowing him and seeing the things that he was doing and what he was building there. Talk a little bit about the impact that he's made on this.
Yeah. So Nelson would always say, hey, I didn't invent infinite banking. I didn't invent insurance companies or whole life policies or the ability to borrow against them. These things have been around 200 years. But he did connect the dots of the thought process of, have you ever considered that the cash values that you're building up in these insurance contracts, that cash can operate a lot like a bank, and you could use that cash to help you eliminate debts that you have or buy assets that produce passive income. And it started when he himself in the early 80s had a series of events, a health issue, theft, grandchild that was born with cancer, a brother who died. He had all these series of events, but also a big one was that interest rates spiked to 23.5%. And we think we're in high interest rates today.
Yeah.
Um,
And
in 1980, they spiked and people really were freaked out by what was happening. And he had been buying real estate, timberland, and had $500,000. And the interest rate went from 8% to 23.5% overnight. And he didn't have the cash flow to cover the debt service. And he was trying to figure out, how am I going to get out of this prison? And that's when he realized that he had cash value in these insurance policies that he'd been accruing personally over the years. And said, the only thing wrong with this is that I shouldn't be paying the banks $125,000 a year in interest. I should be paying it to the insurance companies. And the way I could do that is I got to take a loan against the insurance company's cash value and pay them off. And he called them snakes and dragons, in order to then reverse the polarity and get the money coming to him. And he said, but I didn't have $500,000 at the time of my cash value. So I needed to fix that. And from that point forward, he started teaching people. And early on, it was locally. And then he wrote a book that I think was published in 2000. And then he started doing these 10-hour seminars, workshops all over North America. He was doing 50 to 55 of these, and people would pay him to come in and to teach their customers and their audience. And he would do it. And he was an economist. He was a student of history, a student of economics, and the most well-read person I've ever met. Every time I met him, he had a new book that he would share with me and ask me questions on. And he always was focused on the way that you think. And it was huge. And yes, I do think he's synonymous with the word infinite banking. There's been a lot of other people who taken a different version of it, coined their phrase, made their names around it. But he is the one that most people would say, that's the godfather of infinite banking.
yeah, yeah. I also want to just throw another name out there, and I don't know how true this is, but is this how, I believe it was Rockefeller? Is this like one of the concepts that they use to be able to build their wealth, where essentially, again, rather than borrowing from the bank, they're borrowing from their family, then paying the family back and just building and growing the wealth that way?
Yeah, there's been a lot of conversation around that. So I'll share what I've heard as well. I don't know anybody's probably looked into the actual books on it, but buying and owning whole life insurance has been a norm for most of the wealthy, most of the elite class, as well as the banks and the corporations out there. My business partner worked at Wells Fargo Bank, as for instance, they have over $20 billion in cash value life insurance. I think Bank of America has $21 billion. And so there's been a lot of conversation around the Rockefellers, and even all the way going back to 1960, 1970, the majority of people stored their wealth in cash value life insurance. That was the norm, right? And then IRAs and other things were introduced. The markets became more normal as IRAs and 401ks came on the market scene in the early 80s. So the way that people invest in the stock market today was not as common, right? Only a handful of people were investing in those markets. Most of the cash was actually stored in cash value life insurance. Well, the Rockefellers would have been one of those that would have been owning a lot of life insurance over the years. But there's a lot of conversations about how they've built trust, and those trust own life insurance policies on all the heirs of this trust. And then the heirs can borrow against that cash value and do business based upon whatever the trust decrees are. But then when they die, then the death benefits replenish the trust. And so this tool has been used a lot. Even recently, it was made famous. Jim Harbaugh, the coach for Michigan that now is back in the pros, but what Michigan did was basically loan him money that he used to buy an insurance contract, and that cashed through him because it was a loan. He didn't have to pay income tax on it. But the requirement was that he bought a life insurance policy that ultimately at his death replenishes all the loan and gives them all their money back. So what a beautiful thing. So there's a lot of ways that corporations, wealthy people, as well as banks have been using this for hundreds of years.
Yeah. Let's talk timelines a little bit. And actually, before we get into that, why don't we dive into, we've talked about Nelson Nash and what he's done and some of the other well-known names out there. Let's dive into what a infinite banking system actually is and how you can use it in your own life. Let's draw some real pictures. If you're in this situation, you can do this and then pay yourself back, and or when you pass away, you can pay yourself or pay the loan back. Talk a little bit about the intricacies of how the system works.
Yeah. If it's okay, I'm going to set the stage as to why this is important because I think that Nelson was always famous to say, if people don't understand the concept, the details won't matter. And I think that's so true. Like when we live in a world where most of us are, if we're business owners, our goal is to grow our business to a point where potentially we can sell it, or we can grow it to a point where we don't have to work in it and others are working for us. And then we get that B class income stream that Robert Kiyosaki talks about. For the rest of us, we're thinking, how can we be professional investors? How can we invest in things like what you guys offer, Matt, and funds and other things that can create this cash flow to where ultimately I become financially free? And financial freedom for us is defined when passive income exceeds monthly expenses. So for people who are trying to figure out how do I get to that point, the biggest obstacle, and I've seen thousands upon thousands of personal balance sheets, personal financial statements, income statements, about all the things, is that people make tons of mistakes with money. And it's not their fault. It's because somebody told them, like my mom and my dad, whatever they told me about money was wrong. They didn't understand money, but I listened to them. And it took me a while to have to unlearn those things. Most of the people that are on podcasts, TVs, what they talk about in money is wrong. Now, some of them have made lots of money from the things that they've done, like the podcasts and shows and businesses that they built, but it isn't necessarily the way they invested that got them to that point. So whenever we talk about infinite banking and its purpose, we're saying the number one obstacle to becoming financially free is lack of access to cash. That an opportunity finds cash. But if you don't have cash, where do those opportunities go? They go to someone else. So our job needs to be where we become an opportunity magnet, and we have to have cash in order to do that. The second thing is that people aren't trained to be investors because they've abdicated that responsibility to others. Not that you have to be an active investor, meaning that you have to do everything yourself, but you have to learn how to be a true investor. And if I was investing with you, Matt, I would ask you a bunch of questions. The number one question I'd ask you is tell me how I lose all my money. And then I'm going to validate how I lose all my money. I'm going to go and do all the research. And then once I get to that point, maybe I'll invest with you. And if I do, then I'm going to continue to check to make sure the things that you said you were going to do, you do. That's where my active part, but still allows for passive income, right? There's no such thing as true passive income, meaning that you're going to have to be active. For it to be passive for you, it has to be active for somebody else. And you have to understand what that looks like. So infinite banking's purpose is that I'm going to try to redirect where my money is going that I don't have access to it. And this is a framework that I learned early on. I've continued to apply. And, we have, I don't know, almost 9,000 people in our community right now. And we teach this framework. And it's something right now, as you're listening to this, whether you're on the treadmill or driving down the road, you can apply in your life, is that when I have $1 and I'm going to allocate it, all I have to do is decide, will this dollar create a passive income stream? Or will this dollar reduce a monthly expense? And if it does neither, then is it getting me closer to or further from financial freedom? And when we give people that framework, so they start deciding, where am I putting my dollars? I never want people to place, the average person puts money, most people listening to this aren't average, but they put it in qualified plans, 401ks, IRAs, self-directed, whatever. And they've been taught by their accountants that this is a way to reduce taxes, instead of being told correctly that it's a way to defer taxes for a later date. But more importantly, it's to defer financial freedom. Because when you think about when you want to be financially free, do you want to be financially free today, or you want to wait till you're 59 and a half or later? And for the people that are much younger than 59 and a half, it's usually today. I want to be financially free today. So then we ask them, if I put money in those accounts, will it create a passive income for me? Answer is no, I can't touch it. Does it reduce the monthly expense? No, it's actually an outlay. Dollars are going out of my pocket. So we say, okay, is it getting you closer to or further from? And they say, yeah, it's getting me further from, but I never thought about it that way. But what if I get a match and I go, let's ask the questions again. Did it create some passive income for you? No. Did it reduce the monthly expense for you? No. But I earned 12% on it last year. Let's go back to the equation. Is the goal that we want to be financially free, or is the goal to have $5 million, $10 million, whatever the number is in 30 years from now? So for us, when we talk about infinite banking, it's what is it for? It's to get access to your cash so that you can then use it to either A, buy assets that produce passive income, or B, pay off debts that reduce monthly expenses. And I need to, as I become a better investor, I start being able to make a really good decision of, okay, if I buy an asset, will it produce more income than if I pay off the debt that reduces the income? It reduces the expense. And so now I start to be able to have that framework. Is where do I put my dollars? And I think that's what people who really start to take infinite banking from just a insurance policy that maybe gives me more benefits than my checking account, and it's tax benefited. I don't have to pay income tax as it grows. If I take loans, I can not have to pay income tax on it. If I die or when I die, not if I die, when I die, there is no federal income tax on it. There's all of these benefits that I get from the insurance policy. But the key is, why do I need it? It's because it's going to help me do the things we were talking about.
So I want to maybe trace the money here
Okay.
and draw out the money path. So you had mentioned how 401ks and all of that, they basically are shielding you from taxes. So they're not taxed right now. And again, for the listeners, I do also have a infinite banking account myself, so I know how this works a bit. But so the money that you're putting into the accounts has already been taxed, so it's after tax dollars. Just take it from there. What does that look like from a I found this opportunity that I want to invest in, or actually even taking it even a step back from that. What happens if something happens in my life? Like you mentioned, some of the things that happen to Nelson Nash, I get sick or whatever it is, and I need this extra cash. Talk a little bit about what that looks like and how you get the money, and does it need to be repaid back, and how does that get repaid back? Talk a
Yeah.
little bit about how that all the mechanicals work there.
Yeah. And I will point you, for those who are driving and are visual like I am, I love to draw. Normally, I would be sitting here drawing, talking to you if you and I were just having a conversation, not on a podcast. I know it's not conducive for a podcast, but I like to see visuals. So if you go to wealthwalkstreet.com/invest in square feet, just the way the podcast is titled, there's all sort of free resources. But one of those resources, if you click on there, is our passive income operating system. And we do exactly what I'm about to talk about, is take you through exactly how the money flows and how you can connect the dots so that you can truly turn active income into passive income. So once I have my cash flows organized, I know where my dollars are going, right? There's this rat race side of where we make money, we spend money. And now we're trying to figure out, how do I get as much extra to start doing something for me? And so that's the part that we would say you would put that into your infinite banking system. And for most people, when they first start, it's whatever excess is at the end of the month, right? Let's say you make 20,000 a month, you're spending 10,000 a month, just take 10,000 a month and put it into your infinite banking system.
And
Now,
it can,
maybe,
just to level set too, it can be much less than that too, right?
yeah,
And
no,
again,
yeah, for sure.
if you're
Like,
only making $5,000 a month and you're spending four, but you've got one left over, you could do it with that too. Yeah.
correct. Yeah. We have people who set up insurance policies on their grandchildren and put in like $400 or $500 a month, right? We have people obviously putting in millions of dollars a year into these systems. So it's as big of an idea as your cash flows allow for. So the concept applies. Obviously, it's just relative to what you could do with it based upon how much money you have. And so when you take those dollars and you put it into these insurance policies, now you're going to start growing what's called cash value. The traditional way back that an insurance person, right? I don't consider ourselves insurance people, even though we hold insurance licenses. We sell life insurance, but we're not insurance people. We're investors. So we think like investors. We're like, okay, we're going to put this money somewhere. Where is going to give me all the best benefits? So when we design a whole life insurance policy, we're designing it for the short term and the long term. So we're trying to make a balance between what is my need for access to cash today and what does it need to be as time goes on. And so a portion of that money that you put into the insurance policy is going to pay all the commissions. It's going to pay for the life insurance. It's going to pay for all of the fees that exist in there. And all of that is very transparent. You can look at an illustration. It'll tell you exactly what that looks like. There's no kind of gimmicks on the back end. But we design it to where the cash that's going toward the cash value is as high as possible, with considering what the long-term impacts will be. So if I was putting in 10,000 a month, for instance, I'd probably have access to say 7,000 a month that I could use. Now, some people will come to us and they say, hey, I got this. And again, I'm using 10,000 because you can take a percentage, right? You can do 10% of that. You can do 500% of that, you can do the math. And so it's just a simple number for us to work off of. I've got an extra like $200,000 that I had over here in this just brokerage money market account. It's not doing anything for me. Can I like lump sum that into the contract with the 10,000 a month? And the answer is yes, as long as, you're working with a trained person who knows how to do it. Because there are limitations. Just so you know, the government wants to limit how much money we put in life insurance policies because of all the benefits we get from it. They want us to put money in things that they know they can tax down the road. So we will design it, and maybe they put that 200,000 in there, and maybe like 185, 190,000 of that cash may be available day one. In addition to the 10,000 they're putting in, maybe they get access to 6 or 7,000 of that. So what do we do with it? So you ask the question is, okay, so I'm just using that as an example. I've got some cash to work with here. And now I'm evaluating different investments, and I'm listening and talking to you, Matt, and you're telling me about this new fund and your 186 point checklist that you've done on the deal. And I do my own checklist, and I decide that's a good deal for me. And I say, okay, tell me about the cash flow. And you say, okay, you put in 100, starts paying this as a percentage of pref, day 31, day 61, day 91, whatever it is. And then there's the expectation of a multiple on the back end or whatever that looks like. And I go, cool. So now I take a loan from the insurance company. And this is so much different than what people have done with Money Map. Most people have put money in an investment, and then they sit back, they pray, they meditate, whatever they do,
Yep.
hoping that it will come back, right? That's their strategy. But when you put it into a life insurance contract, if it's designed correctly, you have cash value. And so now I can immediately go to the insurance company. When I say immediately, within 7 days, I can take a loan against that. And the reason I take a loan is because now my cash that's in there, whether it's 7,000 or 170,000, whatever the math is, it continues to grow from that day until I die. And that's what's beautiful about it. Life insurance design, the way that we do it, is that they're guaranteed to grow contractually by these companies that are hundreds of years old. And I'm just leveraging those dollars, which is real estate investors and investors in general. We know leverage is one of the tools used by the wealthy.
Mm-hmm.
And we know that if we spend cash, that money can no longer earn for us. And that's super expensive. They call that opportunity cost in our statistics classes, math classes, as we were taking them in high school and college. And so now I can use that money and I go invest it in your fund. And now when you start paying me cash flow, I can do one of two things. I can either take that dollar and send it back to the insurance company, which reduces the lien that they put against my cash value, which then gives me access to it again. Or I can use that cash flow for lifestyle, or I can use that cash flow to reinvest into the next deal and just continue to recycle it. So there's really three pieces of that: is how do you redirect the money, right? Redirect it from all the places that is going, that's not giving you what you want, get it to a point where once you've redirected the money, then now you can actually recycle the money, right? Because you get it working for your benefit. So I like to tell people that infinite banking is just the process of using insurance, but we're taking loans, we're going and finding assets, we're paying off debts. So we're taking that cash flow and either redirecting it back to the insurance company or recycling it to buy another deal and transaction and just grow the processing of growth.
Yeah. Yeah. So are there any, you had mentioned some type of like money market account or something like that has the money sitting in there. Are there any vehicles that you can't put into this or can't roll over into this? 401ks, IRAs, anything like that?
Yeah, so it's all after tax dollars. So for people like we're not investment advisors anymore. I got rid of all those licenses. So I can't tell you where to take money from and put into it. But we've had clients who have cashed out 401ks and IRAs, and they've come on our podcast and told us exactly why they did it. They were like, man, I had a 10% penalty to get it out, but I had 1,000% penalty to keep it in. They started describing what that looked like. We've had people who've had money in the markets and are like, I'm tired of living this life of never selling. When the market goes up, being fearful that if I sell it, it's going to keep going up, or being fearful when it goes down. I know right now as we're recording, the markets are down almost 10% over the last 30 days. People are fearful of sell. Oh, if I sell right now, then I'm going to lock in this loss. I'm going to give back all the gain that I had 30 days ago. And people are tired of being in those cycles. So they'll sell those. A lot of times people are just redirecting monies that were in accounts that were sitting idle, that they weren't using. If they're business owners, they're moving money from retained earnings into accounts like this and figuring out how to use it to recruit and retain new employees. There's just so many different ways, but yeah, it's all after tax dollars that people are putting in.
Yeah. And you've touched on some things right at the end there. There's benefits to do this as a business owner and what you can do like for your staff too, correct?
Yeah. So Matt, I'm going to freak everybody out right now. You said you've been doing infinite banking. How many insurance policies do you have?
I have two.
You have two. Nice.
Yeah.
Fantastic. This isn't a game, by the way. I'm not like one upping you, but I have 26.
Yeah.
I have 26 whole life insurance policies on 14 different people. And I don't have that many people in my family, but I have my 4 children insured. I have my wife insured. I have my business partner insured. I have my investment partners insured. I have team members insured. I have former team members insured, and also own some insurance policies on just random third parties that I've acquired over the years. But it's just, yeah, there's so many different ways that you can design these. Most people are designing for cash, but there's also some benefits that come along with it, like being able to use it in business that I can maybe insure a key member of my team that keeps them loyal and keeps them with the company for 5 or 10 years. But at the same time, I can use it as my reserve fund for the business or use it as the finance function when I need to buy a piece of equipment or expand or do things like that. Business owners tend to love this. Real estate investors really like it because, hey, I can borrow against it. I can go invest in a deal. I don't have structured repayments, meaning I don't have to start making a monthly payment right back to the insurance company. I have a little time as if I'm doing value add projects to let the capital in the deal to be able to get it back out. And so I can replenish it at my own timing. Obviously, the accountants love it because then they can take all of those investment interest expense for the business or for the investments. They can use it to write off against the gains that they have in those things. So there's a lot of different pieces where people really enjoy using this.
Yeah, no, it really is an amazing tool. From a timing perspective, timeline perspective, how long does it take to get one of these systems set up, right? Maybe I'm listening to this podcast and I just found out about an opportunity and I want to be able to use this policy to be able to get into that opportunity, but the opportunity has a time limit on it. So talk a little bit about timing from I want to move forward with this to I'm able to use the funds
Yeah.
or use the money in the cash value fund as well.
Yeah. The unfortunate answer to that is it depends. We have insurance companies we do business with that actually have accelerated underwriting, which for the people who qualify, so the top 20% of people, as far as health and things like that, not a whole lot of medical background. They haven't gone to the doctor for every illness that have beset them over time. We can get them insured in days and they can fund it and start using it in weeks. For others who that just have had different things and that there's enough doctors' records that the insurance companies can't just use AI to make those decisions. They have to go through the traditional models. Then we get dependent upon the medical facilities that they were seeing to send us the records. And as you might imagine, those doctors' offices don't make money by sending medical records. They're not always the fastest. So it can take 4 or 6 weeks sometime before someone comes in the process and is able to get approved. And then a handful of days after that, once they got the cash values built up, should start using it. So it definitely depends. The first scenario, if you're interested, my wife started her dental practice in December 28th of 2008. And I learned about this concept in January of 2009. And as I'm reading the book, it was talking about how banks will take deposits and turn around and lend them to people to make a return, the spread. And it said oftentimes the depositors are the people supplying the funds to family members and only earning a couple pennies on the dollar. My father-in-law, as a client of mine, we'd sold a couple $1 million worth of shares in different stocks as the market was crashing. And we were just sitting on cash in the Bank of America. And my wife goes and gets a $700 something thousand loan from Bank of America. And it hit me. It was like, oh, wait a second. What if we set up this insurance policy? We insured my wife's life, so it insured your loan to her. We paid off Bank of America, and then we just took the $8,000 a month that she's paying Bank of America and sent it back to you. He was like, can we do that? I said, 100% we can do that. So it happened after the fact, right? We wish we would have known before we'd have set up the loan with Bank of America and paid all of the closing fees and did all the stuff. But the next best time was when we figured it out.
Yeah.
So for people that are, sometimes people are like, oh, I have this thing, it's going to happen over the next week, or I just did it. It's the best time to plant a tree was 20 years ago. The next best time is today. And when I ask people who are doing infinite banking, what's their biggest regret? It's
Didn't start
A,
sooner.
I wish I would have started sooner.
Yeah.
And B, I wish I would have put more money in. It's
Mm.
those two answers almost without a fail.
And when you are, I think you use the word structuring these deals, you are setting up basically you're going to commit to putting in X amount of dollars on a monthly basis. So this isn't something like I've got a little bit of money here and then I don't know when I'm going to have more money. This is payment that is set up, correct?
It depends, right? So the way the insurance companies structure their insurance policy is based upon cash flows, right? So if you think banks operate without risk, you have never seen an insurance company. They literally operate without risk. Everything is mathematical and
Mhm.
it's done to the nth degree. And that's the reason why, banks in the bad years, 50 to 200 fail in a given year, and insurance companies, you don't find them fail, right? If one doesn't do good, then another one acquires it because it's still profitable. So the way these insurance companies operate is that if they're going to take a stream of income, right, flow of money coming to them in order to dictate how they pay out all the death benefits, because that's their liability in the future. And people who ask this all the time is that, okay, I'm committing to some outlay into these. And I say, yes, absolutely, you're committing to this. Now, what does that commitment look like? Is it like a ball and chain, like you just went out and bought a $200,000 ski knock, and now you've got an $1,800 a month payment that you can't get out of? And if you want to try to sell it, you're going to lose all this money. No, it's not like that. I'm making a commitment, but also it's more of in light of a deposit, right? You don't look at putting money into a savings account, an investment account as an expense. You look at it as some sort of savings. And so the same thing is true with the life insurance premium. Now, a portion of that early on, you have a trade off. Some of it, you don't get as much liquidity, but you get all these other benefits. But then as time goes on, you put in a deposit, a premium, and what you put in and what it grows by more than what you put in. And so you see that as a huge benefit because we never see that, especially in checking and savings accounts. But my business partner was the greatest example of this. So he was a mortgage guy. He was making $300,000 a year in his early 20s or mid to late 20s. And he became a customer of mine. And 4 years later, he came to me and said, Russ, I want to teach people this. Like, this is something that is helped me and my family tremendously. And I just don't see enough people talking about it. I want to come and work with you and start teaching people this concept. And I was like, dude, I don't think that's a good idea. Like, you've got, he was having his fourth child at the time. His wife was stay at home mom. I was like, this was well before Wealth Without Wall Street. So we didn't have all the marketing channels and podcasts and people coming to us from all over the country. It was like me going out and talking to people, meeting people. And that's how they learned about it. I was like, it takes a while to build up a business. And he goes, "Hey, man, I hear you, but I don't care. I think this is my calling. This is what I'm about, helping people with impact. And this has impacted my life. And be honest, helping people with mortgages every year. I know that they need it to buy houses, but I don't feel like I'm making a difference." And so he quit cold turkey. 4 kids, stay at home mom, went from $300,000 a year to zero. And at the time, his insurance premiums were $60,000 a year, in addition to however much they were spending in their lifestyle. Most people would go, that's a pretty
That
dramatic
was bold.
example.
Yeah.
Yeah. So what did he do? He went to his cash values and he took a loan. He took a loan that helped pay the premiums for those 60 grand for the next year. He took a loan and put it into his checking account to pay his lifestyle bills for the next 6 months to a year. He took a loan and actually did a couple of private loans where he actually did a couple of mortgages and started creating some cash flow from that time. And then he waited as he was starting to build up his business. And as income started coming, he didn't have to take as many loans. And then as income increased, he was able to start replenishing those loans. So he went from making $300,000 to zero, having $60,000 of outlay to the insurance company. But it was the best thing he ever did because had he not had those insurance policies, one, he would have never had that cash value. So he never would have been able to walk away from the job that he felt like was not his calling. And secondly, because he took a loan from those insurance policies, he was able to replenish them but not stop the compounding interest of all those years that he had already started to build up. And so there's so many wins when people ask me about the commitments they're making and how they're looking at it. There's so many levers with insurance policies if they're designed correctly that if the worst case scenario happened, I can show you how you still win. But
Yeah.
in most scenarios, it's just things that it's the unknown, the fear of the unknown. And so it's us helping them see examples like that of how it works, even in those, what you would think is the most dramatic and crazy example.
Yeah, and that's the thing is I feel like I've heard this time and time again where you feel like or I've heard stories where people were in a situation that you felt like it wouldn't work in the situation. Things are too difficult, whatever it is, and then there is a way to be able to make it work. So it's kind of one of those things that we can cover so many different scenarios here, but you really need to dive into your particular situation. Would you agree with that, or is there
Yeah.
are there ways to be able to say, okay, this is a good time to do it, and this is not a good time to do it?
Yeah.
Any
So
thoughts there?
I think it's important to have a coach. And Elsa Nash talked about that in the book. He said, you need to be in a wealth club, you need to have a coach. And and so that's why we built a community. And that's why we call our guys who help people set up infinite banking coaches. Because you need somebody a coach is somebody that's not going to do the work for you, but can help you figure out things in tough times and help you get more out of out of yourself than you probably think's possible. But almost everyone except one were all former clients of ours. So they all have gone through the same process. They saw it. It changed their lives. They left jobs as pilots, left jobs as CFOs, left jobs as medical sales reps. People that were very successful did not need to come do this, was not doing it because they wanted to sell life insurance, but they wanted to do it because it made an impact in their life. And they want to teach other people how to do
Mm.
it. And so that's what you need. You got to have a coach. So that's what we do is we walk people through this process. And again, you can go through that link and there's an option to set up a free call and talk out your situation. And our team is designed to basically say, hey, here's who this works for. And this is when we don't think it works. Or here's your scenario. Here's how you built out this plan. And there's steps, right? There's just if you do one thing, you got to crawl, walk, run. They teach on that. And then they
Mhm.
can help connect the dots from there.
Yeah, I love it. I love it. Again, I feel like we can go into all kinds of scenarios. So we covered a lot with all of this. So maybe we switch over into the life crafting segment
Yeah.
at this point. So a lot of the listeners know what this is, but just in case you don't know what life crafting is, this is something that I started doing about a year and a half ago or so. And I do this every Sunday where I lay out my goals for the week and I also lay out what the action steps are that I'm going to do to achieve whatever those goals are. And as I was doing this, I started to realize a lot of times I'm guessing because I've never done these things before and I'm not quite sure what I should do sometimes. So rather than guessing, I realized that I have all of these amazing people that I'm talking to on the podcast here. So why don't I just ask them some of the things that they're doing? So I started asking people what their highest ROI activity is, and then we dive into figure out what the do this, do that, kind of the action steps that they take to be able to achieve whatever that might be. Russ, when I ask you, what is your highest ROI activity? What comes to mind for you?
I love being a connector, Matt. And there's a lot of different ways that fleshes its way out. There was a book called Seven Levels of Communication. I don't know
Mm,
if you've ever read that book
I haven't.
by Michael Mayer. And I met him at an event and I was so fascinated. He was a real estate agent in Kansas City, Missouri. And he had built his business during the 2008, 2009, 2010 timeframe when everybody else in the real estate industry was sucking wind. And they did over 500 transactions and it was all through referral. And so he taught this model of what he did to real estate agents. And I was at a real estate event and heard it. And I thought all business owners need to hear this message because what he was teaching was applicable. And one of the things that he taught, Matt, was connecting with people and being the resource for your influence area, right? All of us have an area of influence, whether it's the 5 people around us, it's 100 people, or it's 1,000 people. And for you, Matt, probably with your podcast, you may be reaching 50,000 people. And here's how I applied it early on. It's something that you could do in whatever business you're in. If you're looking to network, is that I would find a restaurant. I would call you up, Matt. I'd say, hey, Matt, I would love to send you as much business this year as possible. I'm in this business where I teach people how to build passive income streams and we teach people how to run their cash flows. Ultimately, we're really helping people become financially free. But what I realize is as time goes on, they need lots of different things that I can't provide to them. And so I want to still be the resource of where they come to and ask questions. And I want to be able to have experts in the areas in which I may be able to refer them to. And when I was asking around and I said, hey, who are the top people that are in this specific area? Your name kept coming up. And so I would love to learn about your business so that I could better understand if I have a client to refer to you, when would be a good time? Would you be willing to meet me for lunch over at this restaurant from 11:30 to 1 next Thursday? Now, how many no's do you think I get to that request?
Yeah, that's a pretty easy shoe in to get at least one person to bite on that.
Exactly. And so people are like, that's fantastic. And then I would call the next person up and I'd say, hey, all the same things. I'm going to be eating lunch at this restaurant from 11:30 to 1, but since I'm there, I may just stay after. Would you be willing to come meet me for a glass of tea and let me ask you all those same questions so I know how to refer you to my client? And what would happen is that you would show up if you were the second person, you would show up and I would still be having that conversation. And I'd say, wait a second, Matt, you need to meet Joey. Joey's in the mortgage business. He's fantastic. He's been telling me all these things about how they're helping their customers right now. And I had no idea all the different options. But Joey, you need to meet Matt. Matt has been referred to me by so many different people. Matt's in this specific area of business. He's handling all these different areas. I've got to go run to the bathroom real quick. Why don't you guys exchange contacts? And I'll be right back. And so I would leave you two, go to the bathroom, take a break, come back. And then Joey would get up, he would walk out, you would sit down, and I would just start asking you questions.
Yeah.
And so that's where I got my start of really connecting with people. Now, how do I do that? I do that on podcasts. I do that on Zoom calls. I don't travel anymore, but I'm connecting with influencers all over the world. And I've just continued that frame in different ways, just it's a little more virtual now than it used to be when I was meeting people locally. And so I've acquired this kind of black book of just world-class people in all these different areas. And as a result, then I'm able to do some cool joint venture stuff with them where I'm like, hey, you have this business that my audience needs to hear about. Why don't we do a swap where we actually do like a webinar and we'll just promote it to our list and you'll get on and teach your thing to my audience. I'll teach my thing to your audience. And the people who opt in will be good fits for you. They'll be good for me. And that's a great way for us to expand our reach. And it's like, yeah, let's do it. And so
Yeah.
now we do that every single month. And it has just continued to grow the people who are interested in what we're doing, but also it allows our people to meet world-class people that maybe they wouldn't have gotten to meet in a more deep way
I,
if we
I
would have done.
yeah, I love that framework. And where my mind went, so one of the challenges that I have is you introduce these two people and obviously you had them top of mind because these are your meetings at that point, at that period of time. But then a month down the road, maybe you meet somebody else who would be a good person for this person to meet, but then you can't remember who that person was. So how do you go about organizing or creating some type of framework that you're able to refer back to? Oh, that was this person. I need to connect those two, and even remember that you met that other person. Like that's one of the things that I always struggle with. So I'm curious how you go about managing those relationships as
Yeah.
well. Is it just a CRM that you're using and maybe putting in keywords, or is
Yeah,
there something else that
definitely
you're doing?
CRM is the most ideal way. So you can just search it, right? Like early on, I was not that sophisticated. I used an Excel spreadsheet. Okay. Name and what role they had. Like what was the business? What did they provide? And then I would also put notes next to it. Did I like this person? Was this the kind of person I would want to send business to? The beauty of this is if you want to learn anything, you just go interview the 5 top people in that specific space and ask them all the questions. Like you're going to get a good insight to what it is. And then you'll also know who's the real deal. So we were talking about infinite banking earlier. When I first got into learning about infinite banking, I reached out to what I thought was the top 5 people and I interviewed them. Some of them I flew to, some of them came to me. Some of them we did back in the day, go to meeting,
Yeah, yeah, yeah.
some of the early online stuff. And I learned in that process who really knew what they were talking about, right? There's a lot of people that were talking about it, but who really knew it? Who was actually doing it? And it's the same way today a podcast, I'm sure you interview some people and you realize they're more of a thought leader, not necessarily a result leader, right?
Yep.
I like to show what I'm doing. I want to be proof over promise. And so that's what I would do. I'd keep track of that stuff, but I'll give you the best question to ask when you're meeting with somebody. And I'll do this with you before we leave. I'll ask the question when I get off these calls. The best way to network with people and truly help people is to ask them this important question. You ready? What is your biggest challenge right now? And
And,
people are going to give you an answer. Go ahead.
and do you frame that again? If you guys are meeting about real estate, what is your biggest challenge about real estate,
Oh,
or you just leave it open ended?
no. At the end, after you've done all this stuff, you learned all this
Ah,
stuff. And by the way, those meetings, if you're doing networking the way I'm teaching it, is that this is not a way for just to be sitting there watching their mouth move and wait for them to give you a chance to jump in and tell them all your stuff. You should not tell them about your stuff in that meeting. It should be because the natural law of reciprocity is they're going to want to start to say, but what, tell me about your thing. And your response has to be to shut up. You can't learn anything when you're talking. You've learned a ton about me because I was the guest. I'm supposed to be talking. But when you're sitting there, you're interviewing somebody just like Matt interviewed me on this podcast, and you just ask questions. And when they say, tell me about your thing, you go, man, I'd love to do that. If it's okay, can we set up another time to have that conversation? So that's the focus. Because right now I got more questions for you. And you just keep pointing it back on them. A couple of things happen. One, they have built a lot of trust through that. People love people to ask them a lot of questions. They get to talk about themselves and you get to learn and you get to learn how smart they are or how smart they're not. But at the end, when you come to a kind of a natural stopping point, I would ask that question, Matt, man, this has been amazing. Thank you so much for teaching me all of this stuff. I feel like I've got all of these ideas that I didn't know about. I definitely would love to catch up with you and talk more about other stuff. But I was just thinking about this. What, if you were to like think about it right now, what is your biggest challenge that you're facing? And I just shut up.
yeah.
And they're going to go one of two ways. They're going to go with a business way or they're going to go with the personal way. And when people go personal, you know that you've really resonated with them because they feel trusting to tell you that. But just because they say something business doesn't mean they don't trust you, but that's just the way their brain is thinking right now. And the lesson behind this is not to hear their problem and try to solve it for them, is to ask this follow-up question. Man, what have you tried so far? And they're going to start processing because they're going to think through all the things that they've tried so far to fix that challenge, whatever it may be. And again, I've heard everything, right? Kids issues, marital issues, business partner issues, investment issues, superficial issues, right? All levels of depth. Tell me what you've tried so far. And then the last question that you ask is, what are you going to do next?
Mm-hmm.
And now they start to answer their own questions. Now they start to think through because a lot of times people just have not taken time to even process it. And if you have an answer to their problem, don't give it right then.
Mhm.
What you do is that you process it. You send them a follow-up after the fact. Matt, thank you so much for sharing with me. I felt like that was amazing that you would be willing and open to share me that with that challenge. And your experience remind me of a time when this is a YPO thing. They have a thing called forums. We have a thing called forums in our masterminds. You never give your opinion. You always start off a response with reminds me of a time when you share an experience. I was going through something similar and here's what it was. And this is what I did. And this is what the result was. I don't know if that helps you in what you're going for, but also here's a resource I found on the internet or here's something I used to do that. If that helps you, great. And you send it to them after the fact. Yeah. Like you become their favorite person.
Yeah.
And my business partner is the greatest at this, but this is how we've grown our business is just by being connectors with people. And you call me and say, hey, I'm thinking about, I need somebody like this. And either I already have the Rolodex of who the people are, or I will go to my Rolodex and I will ask them and they will give me their top person.
Interesting. That that is I feel like this is one of the best podcasts that I've had. That's like the cherry on top of everything else. Like it was a great podcast, very informative, and then we have this nugget right on the end here, incredibly valuable. I love that. I love that. If people want to learn more about you or your services, and I know you just mentioned don't do this, but I'm curious, where would they go? You mentioned the URL a couple of times, but
Yeah.
where's the best way to get in touch with you?
Yeah, I will point you to that URL. We've tried our best to make it as simple for you as possible. If you go to westwallstreet.com/invest in square foot, it will give you that. It'll give you LinkedIn. It'll give you Instagram. It'll give you Facebook. It'll allow you to join our free community. It'll allow you to get on a call with one of our coaches. It'll give you all the ebooks and free resources we have. We built a community. You can go to Wall Street in the App Store, and you can even DM me once you join the community. It's free. And I do answer all those DMs as well. But our job is to try to we want to help entrepreneurs and investors have greater impact. It was my business partner's mission to have more impact. That's ours. And we believe people can have greater impact when they're not worried about money. And so if we can help them walk through these phases of having access to cash, learning how to become a better investor, and then surrounding them with people who are, where they want to be, and now they become financially free, we can have that kind of impact in them having greater.
Yeah. Yeah. I love it. This is, again, great episode, great frameworks, great advice. Russ, thank you so much for being on the show here today.
Yeah. Thanks for having me, Matt.
All right. If that didn't just flip the way you think about money, I don't know what will. Russ just dropped a financial cheat code that's been hiding in plain sight all this time. It's used by banks, billionaires, and even major corporations. So ask yourself, why not you? If you're curious about setting up your own infinite banking system, grab the free resources Russ mentioned at wealthwithoutwallstreet.com/invest-in-square-feet. And if you loved this episode, hit the follow button so you never miss a chance to upgrade your investing game. Until next time, keep stacking the wealth and making your money work for you.